What would happen if a handful of major online services would just go dark?
Our top story of the day, the global IT outage rippling through multiple industries.
How this tech outage may be impacting your money or your bank.
Today, much of the world woke up to what we're calling this massive technology outage.
Global tech outages linked to Microsoft and CrowdStrike causing widespread business disruptions.
Last week, a global IT outage did just that, causing significant disruptions across the finance, tech, and e-commerce sectors. The fallout of the markets was immediate. The Dow Jones Industrial Average fell by 377%. But what actually happened? How did a software update by CrowdStrike unintentionally become the epicenter of a technological earthquake? For value investors, such events can trigger market overreactions and create potential buying opportunities. Let's unpack the events, explore the implications for investors, and identify where the real value lies after the aftermath of this digital disruption. The outage wasn't caused by hackers or a natural disaster, but rather by a flawed software update from CrowdStrike, a leader in cybersecurity. This update, intended to enhance security features, contained a critical bug that disrupted user authentication services for countless corporations relying on CrowdStrike's system. This mistake shows how interconnected and vulnerable our digital infrastructures really are. In the stock market on Friday, the impact of the outage was clearly visible across major indices. The Dow Jones Industrial Average fell 0.9%, the S&P 500 sank 0.7%, the Nasdaq lost 8%, and the small-cap Russell 2000 fell 0.6%. These declines reflected widespread uncertainty and investor anxiety about the stability of our digital systems and the potential for future disruptions. Sectors reliant on real-time data and online transactions felt the brunt of the impact. Technological companies and online retailers and even financial services saw direct hits, with operational disruptions leading to immediate financial losses and shaken investor confidence. Amid market turmoil like this, discerning value investors might see a silver lining. Broad market pullbacks often result in the undervaluation of robust companies with strong fundamentals. Such situations can present rare buying opportunities for those who look beyond the temporary chaos to the underlying value. To capitalize on these opportunities, investors should focus on companies with solid balance sheets, with minimal debt, and with strong cash flows, essentially attributes that enable them to withstand market disruptions. Additionally, looking for companies with a history of stable earnings, with good management, and with good competitive advantages within their industry can also be beneficial. Utilizing financial metrics like the price-to-earnings ratio, the price-to-book ratio, and the debt-to-equity ratio can help identify stocks that are trading below their intrinsic values but still maintaining their strong business fundamentals. Also, tools such as the discounted cash flow analysis can also be instrumental in determining the true value of stocks during volatile periods. However, investing in the aftermath of such an outage requires a cautious and well thought out strategy. It's crucial to assess not just the short-term fallout, but also the long-term implications for the affected companies. Diversification remains a key strategy. Spreading investments across various sectors and asset classes can mitigate risks associated with any single economic event. Additionally, employing hedging strategies such as options can protect against downside risk. Investors should also consider the liquidity of their investments. High liquidity allows for quicker response to changing market conditions without substantial price consequences. Establishing stop-loss orders can limit potential losses as well, particularly in volatile markets. Regularly monitoring and adjusting portfolios to respond to rapid changes in market conditions or to the fundamental outlook of invested companies stays essential. And staying informed through continuous research and market analysis ensures that investment decisions are based on the most current information, helping to safeguard investments against unforeseen market shifts. Just looking into the recent IT outage, reveals much about our digital dependencies and the ripple effects through global markets. For investors, understanding these dynamics is key to navigating uncertainties and capitalizing on the aftermath of such disruptions. Having a list of already undervalued stocks could be quite helpful for any future sudden drops like this, so that you can capitalize effectively. And what are your thoughts about this? Let me know in the comments what stocks you're keeping an eye on. I appreciate you for stopping by, and I'll see you in the next one.